Bank of Uganda has today expanded on the primary dealers in government securities, bringing on board all the 24 commercial banks. Until this afternoon, Stanbic Bank and DFCU Bank played strategic roles in the trading of government securities worth trillions of shillings.
Going forward, all commercial banks will have similar access to the Central Securities Depository, CSD. All the banks will be able to open CSD accounts at the Bank of Uganda for their clients. They will be able to issue and accept bid submissions from their clients, and also to facilitate their clients' secondary market transactions.
Market players, however, indicate that the new signal sets in motion a commitment by the market to fulfill government's growing appetite for juicy and indeed less risky securities and perhaps balance on the profitability of banks.
The concern that access will increase participation, will reduce lending is not true. It might actually increase participation by non-banks and therefore reduce further the holding of banks. Okay, because our amount is fixed. We don't increase it because we have received more funds. No, the amount is fixed as approved by Parliament in the budgeting process.
Today's announcement by the central bank could be good news to government, which is already constrained by slow economic activity.
The auction bid to cover ratio, which is the total size of the bids relative to the amounts tendered for treasury bills and bonds, in 2016 averaged 1.21, which indicated that demand for government securities is strong and sufficient to accommodate the needs of government for domestic finance.
As of June 2015, commercial banks held the largest share of government securities at 45% of the total stock, while 34% was held by pension and provident funds and 11% was held by offshore investors.